Happy Friday from a sunny 23 degrees Sydney. It's been a very, very busy week in the Frame Funds offices. We have been focusing on all of our reversion strategies. Once again, we've been working on this for the last couple of weeks, our short reversion as well as our long reversion strategies. I'm going to be releasing an update on this over the next 2 weeks because there's some really positive developments there. Let's hop straight into the 5 biggest developments for the week economically. Chinese PMI rose marginally to 49.3. This was an increase from the reading in June of 49. The report surprised the market because it had priced in a slump of 48.9. This data is still contractionary, although it was the second consecutive month where we saw monthly rises. The RBA on Tuesday held interest rates at 4.1%. Expectations were for an increase up to 4.35%. They essentially said that they are seeing positive developments with inflation, but still think that they're going to be increasing interest rates a further time later this year. Markets are now pricing that in for one further increase in interest rates coming into the tail of this year. The Bank of England hiked interest rates by 25 basis points up to 5.25%. They have been very aggressive with their attack on getting inflation back down to its 2% target. The UK has one of the highest inflation rates out of most major economies, so they are very, very persistent in their approach to trying to get inflation down to 2%. New Zealand Q2 unemployment rate nudged higher, 3.6%. Expectations were at 3.4%. The reason for this, and interestingly, because of pricing pressure and increases in prices, we have seen more family members look to enter the workforce, which has increased the labour participation rate in New Zealand up to 72.4%, which is a new record. By more people entering the workforce, it actually resulted in a higher unemployment rate. US manufacturing PMI rose to 46.4. Expectations were for an increase to 46.8. The previous reading was 46, so we are seeing an increase in the short term. However, this was an uninspiring figure because it's the 9th consecutive month of being in a contraction reading. So for those of you who don't know this, if it's a reading sub 50, it shows a contraction, above 50, below 50 contraction, above 50 expansion. The primary reason for this was a downturn in the housing sector because of the more restrictive lending conditions that we're seeing there. If we look here at futures markets, thanks to FinViz, you can see that we've seen some very, very interesting moves. Heating oil had a very, very big week, up 5%. Our multi-strategy hedge fund is currently heavily invested in that market, so we are thankful that we're seeing that market rise. We have seen a lot of volatility in the grains and cereals, so wheat, corn, oats, canola. They have all experienced a lot of volatility over the last 3 to 4 weeks. Essentially, if you've been keeping up with these weekly updates over the last sort of 4 to 5, 6 weeks, it's been a yo-yo, 1 week up, 1 week down. Probably the biggest thing in my mind to have a look at is the 30-year bonds. Over the course of the week, they're down 2.88%. This has been on a steady decline. So that essentially shows that prices are declining, yields are going up. So people are expecting that there's either further risk into the market or that longer term interest rates are going to be continuing to increase. In the Aussie market, it's been a pretty bruising week. CBA, Westpac, NAB, and Goodman all led the declines in the Aussie market. The biggest decline, however, out of the big caps was coming from the materials. Rio, BHP, Fortescue down 10%. Iron ore hit a new 1-month low yesterday, so we've seen a lot of the selling pressure on BHP, Rio, and Fortescue occurring as the iron ore price has continued to decline. CSL, ResMed were things that did receive a little bit of a bid. However, there weren't too many bright spots in the large cap space across the board. So the summary of that is there is a big sellout of large cap cyclical businesses and a little allocation into some more defensive allocation businesses like your CSL, ResMed, and a tiny bit of flow into Telstra, up 0.25%. The frame funds barometer, you can see that it has been relatively sticky over the last 1 month. There's been a number of participants, or another number of universe members hitting short-term and long-term trends, which is positive because there is that correlation between that and the futures fund or the multi-strategy hedge fund. If you would like to see how your portfolio matches or compares to some of our quantitative portfolios, please send through the list of the companies you have and we'll do an analysis for you and send it back. Outside of that, have a nice weekend and we will speak next week.